Welcome back. Joining us now for a look at the day's markets action is Jacobus Brink from Schimdt Family Office. Jacobus, always lovely having you on with us. Now, we've had quite a lot of news influencing markets. Coming from last week, we had that softer inflation print. We had dovish comments from Powell, kind of powering markets. And then towards the end of the week, we saw some earnings coming through. Citibank and JP Morgan posting high profits, but we did see a bit of a blip from Wells Fargo with that profit sliding. Today we had BlackRock as well as Goldman Sachs posting upbeat profit. Let's start there. What have you made of trade over the past week as we, gear into the earnings season and just kind of settle into this rate cut euphoria that we've been seeing?
Yeah, no, thanks so much for having me. It's always a pleasure. Interesting times. We'll get to, the weekend's news in a bit, but just moving back onto monetary policy. Obviously the inflation data we saw last week came in softer than expected. There was some, the devil's always a bit in the details there. So some of the underlying components was still a little bit higher, but, in general, I think the market took it well. But I think the main thing that happened post that CPI was the rotation trade. So we immediately saw, the market investors getting back into some of the more value names, in the anticipation of rate cuts. A bit of a fly in the ointment on Friday with the PPI numbers that came out slightly higher than expected. PPI tends to lead the CPI numbers by a few months, so hopefully this doesn't bode too badly for inflation, the inflation expectations going forward. But the market's now pretty much pricing in a full rate cut of 25 basis points in September, with possibly some more in December. And Chairman Powell is actually also speaking later this evening, so we'll also get an idea of his feel for what we saw from the inflation numbers. Then moving back to earnings, which is obviously the other big topic at this stage in the US. The early banks reporting on Friday, not really shooting the lights out. Didn't see too great numbers from them, but Goldman, when they reported, I think it was up 1.5% post the open last time I looked. Great numbers out of there. But I think in general it's going to be an interesting earnings season. We're seeing the likes of Tesla and Netflix, Johnson & Johnson, everyone reporting later in the week. But the market is expecting earnings bump of about 9.3%, which is quite a bit higher than the 5.3 we saw in the Q1 numbers. So it is a fairly high hurdle. So I think the risk for me with this earnings season is definitely going to be on some of these companies surprising on the downside.
All right, now earnings aside, as you mentioned, the news that happened over the weekend, politics has remained in focus in the US after the attempted assassination of Donald Trump this past weekend. It seems like markets are penciling in a return of Donald Trump in the in the White House.
Yeah, no, indeed. Just when we thought things couldn't get more weird and interesting,
right?
We get an assassination attempt on a presidential candidate. The Trump election campaign got a massive boost over the weekend. The numbers that we saw from some of the betting shops are now for a 70% probability of a Trump victory. So definitely boosted his re-election chances. And what we actually saw now is the yield curve steepening quite aggressively, and this is I think the main thing that's actually lifting stock futures today, because if you look at markets in general, it's pretty much a US risk on trade and a global risk off trade. We saw the rand selling off, Europe was down on the day. Yes, we did get some negative earnings numbers out of some of the luxury names there, but it's pretty much a all USA trade today. I think the simple conclusion is that, as I mentioned, this is probably going to boost Trump's chances of returning to the White House, but that also adds to the probability that he could cut taxes further, he could increase trade tariffs, the whole reshoring trade, could start to come up again. There's also some people that reckon, there could be a possible withdrawal of the U.S. Support from the Ukraine. So it really makes a massive difference in the expectation of what's actually going to happen now. And this is definitely not a great thing for the Democrats. They've been under a lot of pressure of late, post the first debate we saw between President Joe Biden and President Trump. So it's all happening here, but I think the main trade that sort of caught my eye today was definitely the yield curve steepening, and that obviously spilling through into interest rate markets, and there's also expectations for what the Fed will do going forward.
Let's get into some company news now. IAB is eyeing a takeover of Bell Equipment. If this deal goes through, it will result in Bell delisting from the JSE. Market's really liking the news. I think the last time I checked, that share price was up over 46%. What have you made of that move?
Yeah, no, interesting one. It was by far the biggest surge we ever saw in Bell shares. And I think, the market is currently, they offered a premium of about 53% on the closing price. The market's currently pricing, as you mentioned, up about 47%. So not entirely pricing in the deal to go through yet, but, I think it is a fairly sort of done deal, if you ask me. The two companies, they had entered into an implementation agreement in terms of what AIB offered them. And, I think AIB just think for Bell to really remain competitive and to be able to adapt and grow in what is basically now becoming an increasingly competitive industry, it has to restructure, and it'll definitely be in a better position to sort of push through some of the things that they are looking at implementing, if they do operate in the unlisted environment versus the listed environment. So the market, seems to like it, and we'll see what happens with that one. It's only scheduled to go through in October if it gets approved, so there's still some time on our hands, so we'll see how that one turns out.
So good for Bell shareholders, but not so good for the JSE as that delisting trend continues. Now, Bell Equipment, not your stock pick. What is your stock pick today?
Yeah, so my stock pick was, we've been fairly bullish on the whole SA Inc. trade for quite some time now, and as you mentioned, the Bell delisting is, just another one in what has been a trend over the past number of years. But it was a close call between gold and my stock pick. Gold, I think, still, it's sort of at the point of breaking out from all-time highs. We could be a bit bullish, if we see a further sort of risk off globally, the rand weakening further, gold could be interesting. But my stock pick for today, going with local, going with the SA Inc. trade, is Sun International. I've had this one on a few times on the show over the past 12 months or so. It's trading about 15% off its highs. It's had a recent pullback, so we've been buying more of it. I still think, just in the gaming and the betting market, they are still really dominant there. We've got some news out that they are, spending some R500 million on upgrading Sun City, and especially the palace at the Lost City. A great company. They've been around forever. I think investors are able to really take advantage of this pullback, and this is definitely one for the longer run.
Sun International, one to look out for. Jacobus, thanks so much for your time and just taking us through the day's markets action. That was Jacobus Brink from Schimdt Family Office.